Today's presenter is Shovik Chatterjee. Shovik is a product owner with Digitate. He focuses on building products aimed at business operations using Ignio, a cognitive automation product by Digitate. He was closely involved in shaping, packaging, and launching Ignio. And prior to this role, he was a solutions architect focused on creating solutions for large outsourcing opportunities across industry verticals. Shovik has been with TCS for the past 22 years and has been involved in diverse roles across sales and delivery. Now, I'll pass it over to you.
John. Share my screen.
Let me make you the presenter. Okay.
Okay, is my screen visible, John?
Yes, it is.
Thanks everybody for joining. So what I'll do today is I'll spend about 30 minutes or so taking you through this product, what it is, what it does, some use cases where you could possibly use it and deliver value to customers. But most importantly, who could you take such a product to and why would it be valuable to them is something that I will talk through. And time permitting, I'll also touch upon a couple of case studies that we've had with a couple of other customers that should help you pitch this product conveniently, right? So let me straight away get down to what is this product, right? So we call this product as Ignio Cognitive Procurement. It's a product that we've built on our cognitive automation platform, Ignio. It is directed at the business domain of procurement. Procurement, as most of you might already know, is something of a corporate function that you would find in any large enterprise. It's the corporate function that is entrusted with procuring goods and services that are required to run a business. And so that is essentially the domain at which this particular product is aimed at. What it does is it essentially screens purchase transactions with the sole intent of detecting or predicting any kind of anomalies that might lead to spend leakage or any kind of non-compliance. Right? So in some sense, you can think of it as a surveillance product, which is continuously monitoring any kind of expenses that an enterprise has to bear, with the sole intent of figuring out, is there a way you can save money? Is there a case of non-compliance? Is there a case where you might be increasing your cost of operations? That's essentially what this product does, right? We also like to call it a virtual procurement analyst for enterprises, for the simple reason that it is essentially analyzing transactions, and that's another way in which we sort of name the product, right? So I'll just quickly take you through the key features of this product before I get down to specific use cases. So there are 2 or 3 core features based on which this product works. The first is something which we call as Maverick Analysis. The sole purpose of this feature is to figure out if there is a better way to procure an item at a better price point than the one at which the company is already procuring it. So think about items or services that an organization procures for which it does not have any kind of contract with any kind of suppliers. There is a high chance that these items are procured at widely varying price points, right? So which is what gives rise to what we call as a price variance. So think of a chair that an organization needs to buy. Chairs could be bought at various price points if there is no fixed supplier for chairs. So it's possible that an organization is buying a chair at $200 $250, $300, way up to $400. So in that sense, you have a price variance of $200 to $400. And if you are buying enough number of chairs, one would question why couldn't you buy them at $200 and save some money? That's essentially what this particular feature, focuses on, identifying which are these items for which you have a huge price variance, and then recommending a price point at which you could potentially buy that item to save money, right? And it does it in two pieces or two parts. First is it analyzes historical data to identify such items which have a high price variance, validates it with the user, in some sense checking with the user whether it's the right item to track. And once the user gives a consent that yes, this is the right item to track, it puts it on a watch list, and then it detects any kind of incoming transaction or new transaction, whether it involves that item and whether it is being procured at an abnormal price point. Right? That's what this particular feature does. The second feature that this particular product has is what we call as exception analysis. It is essentially meant to analyze any kind of exception that the procurement process can run into. So an example of an exception could be you ordered an item, the item was expected to be delivered within 7 days, but it did not. It got delivered in 10 days. And so in that sense, the exception here is a fulfillment delay, if you think about it. Likewise, there could be exceptions like a vendor raised an invoice for something that he has delivered and did not get paid on time. And so that would qualify as a payment delay, right? So these would both qualify as exceptions. What this feature does is it analyzes different kinds of exceptions and mines patterns, patterns that can explain why these exceptions happen more often than not. And the whole intent of mining these patterns is again to validate with the business user if these patterns are worth monitoring in real time. And if they are, then you put these patterns again on a watch list. And then for every incoming transaction, you check if there is a pattern match, and you flag the transaction saying this is a transaction that is likely to run into this kind of an exception. So in some sense, the whole purpose of this particular feature is to predict any kind of problem that you're likely to run into in the course of the business process and highlight it in advance such that you can avoid that exception, right? That's what this feature does. And the last thing that it does is something which we call as spend analysis. This is a classic slice and dice of all the expenses in a particular area that an enterprise has sort of incurred. The analysis is done from a perspective of figuring out whom are you spending with, how much are you spending, what are the big ticket areas where you're spending, is there a way in which you could rationalize the supplier base and procure from a lesser number of suppliers? Is there a way you can figure out what are inconvenient payment terms through which maybe money is going out? Right? There are lots of analysis that you can do out of the box, which is what this particular module brings to the table. Right? So now the question is, how does a product like this work, given the fact that this is essentially an analytics product? So this is how it works. So think of it as an analytics layer, which is sitting on top of what we call as an e-procurement system. Right? So you would find various e-procurement systems in large organizations like an SAP or a Coupa or an Oracle. These are like ERP systems that have been deployed essentially to punch in the purchase transactions, right? So this particular product sits on top of it as an analytics layer, and at various parts of the procurement life cycle. So if you think about it from 1 through 6, what is shown here is an actual procurement cycle where you raise a purchase request, it eventually gets converted to a purchase order, a vendor gets notified, he delivers the services or the goods, they are received, acknowledged, then an invoice is sort of presented against which a payment is made, right? This is like a classic procure to pay life cycle. At different parts of the life cycle, you could present our software with the underlying data, the transaction data, and what it gives you back are interesting insights. And what these insights allow you to do is they allow you to make this overall process more effective, right? That's essentially how this particular product works, right? Just to go into it a little bit more in detail and give you examples of the kinds of intervention that it does. So it's the same process that we have outlined here in a slightly more elaborate way, where you have somebody who raises a request to the procurement department, who converts it into a purchase order, places the order with a vendor or a supplier. They supply the goods. The company acknowledges receipts of the goods. Supplier raises an invoice and gets paid for it, right? This is essentially the procure to pay process. If you think about it, there are lots of problems that can happen in this process, right? So we talked about Maverick purchases where you're possibly leaking money. There could be instances of non-compliance where somebody is trying to maybe game the system. There are fulfillment delays. There are cases of inadequate fulfillment, as in you ordered for something but you did not get that, or you got some goods which were damaged, or you ordered for 10 units and you got only 6 units. These could be cases of inadequate fulfillment. There could be unfavorable payment terms where you're being forced to pay at a shorter time and you don't want to do that, or there could be payment delays, right? The applicability of this product is across multiple such cases, and I will kind of go in and maybe elaborate on various kinds of use cases where you could apply this product, right? So I talked about trying to plug leakages or essentially save money by using this product. That's obviously its principal role. You can also use it to figure out what are the items which are essentially items under unmanaged spend. What I mean by that is you don't have any contracts, you don't have any fixed suppliers from whom you buy these items. And because you buy them from a wide variety of suppliers, there is a high chance that you're buying them at widely varying price points. And what the software can reveal is what are those items for which you may want to consider bringing them under a managed spend category, as in you rationalize the set of suppliers from whom you want to buy it, and that way you can negotiate better prices and get better deals. We've talked about exceptions. I'll not go into that again. There can be ways to sort of detect attempts to game the system. You could use the software to do that. An example would be, there are many companies which have this policy of allowing you to purchase items below a certain threshold, let's say $5,000. So if you buy anything under $5,000, you don't need any approval, or you need minimal approval. What people tend to do is they try to take advantage of this, and if they have a higher value purchase, they tend to sort of split it into smaller purchases and they try to go under the radar. You could sort of attempt, you could sort of detect the attempts to sort of game the system that way. You could get guidance for which vendors to play with and how much to negotiate prices with, because you would analyze the historical data using this particular product, and it would guide you on the right price points and the right vendors to go and talk to. Interestingly, you could also analyze that, in some cases, there might be a bidding process underway to allow people to buy. But in spite of a bidding process in place, you might notice that there is an inherent bias in awarding the contracts. And, one vendor sort of tends to win most of the contracts. If there is any underlying bias, that can be revealed through patterns from historical data. And then we have talked of some of the other ones like an unfavorable payment term or processing fallout. So in the case of, let's say, processing invoices, ideally you want the invoice processing to be straight through, but let's say it falls out of the touchless processing queue because the amount mentioned in the invoice does not tally with the amount that is mentioned in the purchase order. That would essentially be a reason why it would fall out of the touchless queue and be diverted to a human, which essentially means a higher cost of operations because somebody would have to manually then go and investigate the case, right? Ideally, if you knew patterns or if you knew why these fallouts happen, you could detect them pretty early on in the purchase cycle. The moment a purchase order is keyed in, you could sort of flag a purchase order saying this one is likely to sort of result in a delayed payment unless you talk to the vendor and ask him to make some corrections, right? So that's something that's possible. And guidance on budgeting, of course, because you're analyzing spend, you could sort of use it to sort of budget better for the next financial year, right? So the question is, where do you take a product like this to, and who would be the potential buyers? So since it is obviously in the space of procurement, the first place within a large organization where somebody might be interested is the procurement department itself. And users 1, 2, and 3 would typically fall in that bucket. One is obviously the chief procurement officer because he heads that function. He would typically have a whole bunch of category managers reporting into him. Category managers would be people who are responsible for procuring items or services in a particular category. So an example, somebody might be in charge of just IT, hardware, and software procurement. That's a category manager. Somebody might be in charge of facilities procurement. Somebody might be in charge of admin procurement. Each would essentially qualify as a category, right? So you would find quite a few category managers in any large organization. They would be typically interested in buying this because it is in their interest to reduce the spend that an organization has on a particular category. Then you have global business services owners. These are people who are essentially running large operations, large pools of people sitting inside their operations, who are essentially handling the transactions. So the people who are the actual buyers, who are actually keying in the purchase orders, would report into a global business services owner. Similarly, the people who are sitting in an accounts payable department inside an organization, they would also sort of report into a global business services owner. And why would a GBS owner be interested? Because they are always under the pressure of reducing the cost of operations. They are not sort of allowed to expand their teams beyond a certain count. And so anything that reduces the work volume for them, they are interested. And this is a product that, like I said, if you analyze the exceptions, and in some sense, if you think about it, a GBS owner is essentially in charge of handling all of those exceptions through the humans that sit in their pools. So if there is a way in which you can reduce the work for them, it allows them to manage their operations better, and hence, again, they would be interested candidates. A chief financial officer in number 4. As you can understand, since we are in the space of procurement, or more broadly corporate expenses, if you may look at it that way, procurement is not the only department which spends money to buy goods or services. Think about your travel department. They are booking flight tickets, they are booking hotels. That's also a channel through which a company spends. Similarly, think about yourselves as employees of a company. You spend through corporate cards that have been given to you by the company, or you might spend on your own and claim them as reimbursements, right? So money flows out of a company through multiple channels. And if there is one individual in a company who's interested in keeping an eye on finances and expenses, it is the chief financial officer and his organization. And so that's another candidate who's a logical interested buyer. And last but not the least, you have several business owners. Like I gave you an example of travel. The head of travel may or may not use an e-procurement system per se to buy, but he has a certain amount of budget which he has to spend, and he has to be prudent about it. So in some sense, think about any business owner who's sitting with a budget and has to be prudent about it, and that person wants to monitor his or her expenses because he wants to figure out ways in which he can save money, or he can improve compliance, or he can reduce the cost of operations, becomes a logical sort of candidate in an organization who can buy, right? So in some sense, this is a product that you can take inside an organization through multiple entry points. Procurement organization is obviously the first place, but you could take it to anyone inside finance, anyone to travel, or any other department which has a substantial spend and they are interested in monitoring their spend on a day-to-day basis. Right? That's essentially where you would take this product. Just to summarize the kind of value that a customer stands to gain by using a product like this. First is, of course, optimizing spend. That is the primary value. So can you detect spend leakage? What are areas where you are not aware, but you are leaking money because is just buried multiple levels below. It surfaces those opportunities. So that's the first area of value. The second value bucket is reducing processing costs, by which we mean any kind of expense which requires any kind of human intervention is a high processing cost. So if you can eliminate instances which require a human intervention, you are reducing processing costs, and that's an area that we focus on. And the third and final area where it delivers value is fundamentally improving compliance. Again, compliance is a very broad word. While companies do have contracts in place with suppliers against whom you should sort of buy, but most of the procurement in an organization typically happens outside of contracts, and they happen on the back of certain policies or procedures that are typically laid down by a company, and employees are expected to comply with them in spirit. Now that's easier said than done. There are multiple cases where people will either try to flout the norms or unknowingly, just because it's a blind spot, you might end up with a non-compliance case, right? So that's essentially another area where the software can essentially analyze the transactions and point out these instances. Right? Just to give you a couple of examples of how such a product has been used by a couple of customers. This is essentially a airlines company, a US-based airlines. They use this to essentially analyze their expense in travel. So two ways they used it. One is, employees in their company are given corporate cards because it's an airline, so you have a lot of crew movement happening globally. So the crew, they are given corporate cards to spend, and at the end of a certain period, you can analyze the corporate card spend to figure out which are the employees who tend to spend more, or which are the employees that are probably spending on areas where they shouldn't. Typically, the way they do this today, or they used to do it yesterday, was fundamentally do audits using a third-party firm who would come in and do a sampling of corporate card transactions and then run some rules-based checks. We essentially brought in this particular product and converted that to a more a pattern-based sampling of purchases. So which are the corporate card purchases that you should even audit can be sort of selected by the software. It can mine patterns that indicate areas of high spend by certain employees and sort of carve them out and say these are the ones which require a second degree of inspection. That's an area where they sort of used it and sort of improved their non-compliance detection substantially from about 8% to 22%. The other area where they used it was typically people book hotels, and this is again the crew. And so if you analyze all hotel bookings in the organization, again, interestingly, you can figure out which are the hotels that employees tend to prefer and why, and which are those brands or hotel chains, and what are the price points at which they were able to book hotels, and then use that to essentially go and strike corporate deals with these hotel chains. If you find a Hilton is a preferred hotel, then you essentially go and try and do a deal with the Hilton to get a corporate rate, which then gets passed on to its employees. And so that's how they essentially analyzed it using our product. So this was one area where they took a certain set of expenses and analyzed it with the cognitive procurement product to figure out ways to save money. This is another interesting case for a pharma company where they were struggling with a very high sort of invoice backlog. So this is essentially a lot of their suppliers had raised invoices and the invoices had not been paid in time. And a lot of invoices were stuck for various reasons, which effectively leads to delayed vendor payments. And in many cases, they attract penalties, which kind of drives even further leakage. The way the product was used here was to analyze what were the causes of these delays, and then again try to mine patterns that sort of explain these delays statistically. And these patterns were then put on a watch list, and all subsequent purchase orders were sort of screened against this watch list. and those purchase orders which were likely to sort of get delayed were flagged pretty early on. That essentially improved the first pass yield to about 60 to 65%, as opposed to about 30 to 35% in the last fiscal year. And it has sort of started to reduce their invoice delays, right? So this is an area where essentially I would say the cost of operations used to be significantly high because of a lot of human intervention, and you used to also have leakage because of penalties, which was essentially arrested by using the product, right? So I'll end with why would anybody want to use a product like this? There are four sort of reasons. One, we say is it expands in some sense the remit of procurement. That's how I like to put it. So typically when somebody thinks of procurement in an organization, the procurement department is the first corporate function that comes to your mind. But if you think about it, that's not the only channel through which a company spends money. Like I said, it could be your finance department, it could be your travel department, it could be your regular employees. So the first thing that our product does is it does not make a distinction between what is the channel through which the money is flowing out. As long as it's an expense transaction, we are open. You can send these transactions to the software and it would analyze them for you. So that's the first point. The second point is it's fairly convenient to use. At this point, we have kept a sort of an Excel file interface with the software. So if you just give it a data dump in a CSV format, it can sort of suck in that data, crunch it, generate the insights, and show it on the screens, and also allow you to download the insights. And so in some sense, you can get started immediately. There is no system integration that is really required to start analyzing your data. So it doesn't matter whether you're using some robust ERP system or whether you're using a homegrown system. All the system needs, all this product needs is data. As long as you can provide that data in an Excel file in a particular format, we can get started pretty much immediately. The third point is the intelligence that we bring to the table is fairly granular, fairly live. So what that allows you to do is it allows you to action a particular transaction. So for instance, if I am able to tell you the moment you place a purchase order, whether you chose the right vendor or not, you get a chance to actually modify that purchase order and change the vendor before the vendor is notified, right? And that's the granularity of the intelligence. And if you can sort of pass on this information, within a day, you can sort of actually intercept that transaction in the same day, right? So that's essentially what we call as granular and live intel. And last but not the least, I think it encourages a do-it-yourself sort of mindset. Why we say this is because think about the exception analysis that I talked about. I talked about delays as a kind of exception, but exceptions could be just about anything, right? It could be delays, it could be quality issues, it could be fallouts. It's literally left to your imagination on what is the kind of human intervention that you would like to avoid or minimize, and you analyze that, you mine patterns, and then you sort of screen all subsequent transactions against these patterns, and you try to preempt or prevent these exceptions from happening in the first place. So how you use the product, in some sense, you are at the liberty to sort of decide what that exception is and sort of go forward with it. So I'll pause here. If there are any questions, I'd be happy to take.